who should get to take the most fundamental economic decisions of a country? Take the case of democratic polity like India. At the end of the day, whatever decision the country is taking, it boils down to political accountability. What does it mean? That means only one thing. The politicians of the day get to decide every major decisions, including economic decisions of the country. Now comes the most important question. Can we always rely on the wisdom? Can we always rely on the capacity, ability of our politicians to make the right decisions? This is the major thesis for today's NewsKase discussion. And everything that we are going to discuss today is from the perspective of the recent economic crisis that is boiled down in Turkey. Let's get started. So the premise is very clear. It is not focusing too much on Turkey's economic situation, but who should make the economic decisions? What are the costs if you prioritize, if you overlook economic fundamentals in decision making? Let's go ahead and see the curious case of Turkey's economic situation. See the graph. This graph shows Turkey's economic growth from 2010 to 2023. Now, one thing is impressive. Debarring some bad phase after 2018, till 2018, if you look, there are many years Turkey has crossed beyond 8% growth. Some year it crossed even 10% growth. 5% growth has been crossed in almost every year. Now, for a developing country, this is stellar economic performance. This is very impressive economic performance. Even compare this with India's economic performance. We are somewhere in the range of 5, 6, 7. And this is getting slightly better results. Now, a country who is growing at such a higher pace, a developing country growing at such a higher pace, the general tendency, you look the country with so much of optimism. You look the country's economic future with so much of expectation. But what unfurled in Turkey is completely different story. It moved into a complete economic crisis in 2018. The implications of the crisis is still being reflected in Turkey. Even the recent times is facing the economic situations where the inflation is more than 40%. 40% inflation is something that unbearable to the citizen of the land. Now, despite having such a strong economic growth, what led Turkey to hold this crisis? Let's understand this from different dynamics. You can see the opposite side of the economic story from the fall in the Turkish currency. In 2014, Turkish currency was valued at $1 is equal to 1 Turkish lira. By 2018, it fell to 4.5 lira. For $1 equal to 4.5 Turkish lira. Now, go down 5 years down the line. June 2023, $1 equal to 23 Turkish lira. Go a few more months. In October, it touched 28 Turkish lira. So the rate at which the devaluation of the currency is happening in Turkey is immense. So this shows another picture of the country. This shows absolute unsustainable economic policies. This shows some kind of a terrible economic situation. Same goes with inflation. You see the inflation graph. Despite having a moderate inflation in 2010, it peaked to 85% in 2022. To one side we have good GDP returns, other side we have completely contrast economic performances. Now, what led to this situation? Let's try to understand this. Need to understand one major problem with Turkey's growth in 2010s. The problem was where the growth was coming from. You see the case of China's growth. China has achieved immense economic potential in last 30 years. Now, what all leverages China is getting today, the base of it is the stellar economic growth in last 30 years. So compare it with Turkish growth for a short period of time. China's growth came out of export promotion. China's growth came out of increasing the exports year after year. But this was not the case for Turkey. See this graph. Turkey's imports were at the highest. The topmost graph shows the Turkey's imports and the lower graph shows the Turkey's export. Turkey's export was never getting competitive. Their graph was never increasing. It was always lying low, and the imports graph is always at a much higher stage. What this result in? This result in a significant current account deficit. Almost it reached a level of 50 billion US dollars per year. So every year 50 billion US dollar is moving out of the country. What is the consequence of having such a big current account deficit? Now compare the case with India. We also a country with a very big current account deficit. Our current account deficit for 2023 is estimated at 80 billion US dollars. Now considering this huge current account deficit, why there is no crisis in India? Because we have other sources to get the dollar. We have high level of foreign direct investment still coming to India. At around 2 point some billion dollars every year is coming to India. We have FIA investment, even though there is high level of fluctuations in FIA investment, still at many of the years India have strong FIA inflows into the country. Beyond that, we have a significantly strong forex reserves with RBI, crossing more than 500-600 billion US dollars. So this give RBI power to intervene in the market, to power to do certain actions in the market to control the economic variables. But Turkey's case, this was not the case. It doesn't have this all luxuries. Even though FDIs were increasing, but it was not considerable enough to manage this current account deficit. And this mounted, so what the government did in this situation? It anyway need dollars. It relied on external debts. You can see in the next slide, the external debt of the country continuously got rising. And it is rising at a constant scale. Every dollar that is moving out of the country due to this current account deficit, that has been funded by external debts. Now when external debts comes into picture, this comes with so much of responsibilities. This comes with so much of a limiting point. And 2018, these debts reached a limiting point that country cannot be managed beyond this. It cannot repay its debts. And that lead to the economic meltdown. Then it has to go to IMF, get all these deals signed and get the economy back on track. Now, once just the economy was coming back into track, then come the pandemic and the recession. Now, pandemic and recession give another blow to the country. But the only relief was, it was not just for Turkey, it was for everyone. Now, since it is for everyone, the world go into a recession phase. Since in 2021, when the world was just trying to come out of recession, then we have the Russia-Ukraine crisis. Now, how economically every developments unfolded. At one level, Turkey was already facing an economic crisis in 2018. And what does the government do when an economic crisis happens or a recession happens? Government want to increase the spending of the people. Government want to increase the money supply in the economy. So what the government does, like every other government, the government of Turkey also reduce the interest rates to manage the recession situation in the country. Then come the COVID pandemic. Now due to pandemic, the country has to further decrease the interest rates of the country. Now already the interest rate of the country is at a rock bottom. Even this development you can correlate with India. Post pandemic, we were also reduce our interest rate. Repo rate was almost on 3%, 3.25%. Now come 2021. In 2021, when every economy was on the path to recovery, what was the economic situation throughout the world? Due to the overspending by the government. Government was running at 5%, India was running at 9.4% fiscal deficit. On the other hand, the interest rates are already at very low. This everything resulted in some kind of a high hot money flow within the global economic system. This resulted in over-leveraged economic cash flow situation. And what is the over-leveraged cash flow situation result in? It resulted in inflation. You might have read about around 6 to 8% inflation in USA. That was something too huge for the standards of USA. Even India was facing inflation pressure. At many quarters, we missed the 6% mark set for Monetary Policy Committee in India. So when this situation was happening, what is the wise decision for the monetary policy to take? There is only one way monetary policy or the RBI or the central bank should manage this situation. That is by sucking out the money supply in the economy. How to do this? There is only one way, that increase the repo rate. We have seen in India our repo rate is currently 5.9%. Nearly 300% increase we have done over the last 2 years. So this reflection has been done in USA also. You might have heard about the taper tantrum. That is due to considerable increase in the repo rate in USA or the Fed rates in USA, the influx of FII into USA from the developing countries. So this was happening around the world. What Turkey done was the most biggest economic blunder. Turkey went the complete opposite way. What Turkey did is, Turkey, even not just resisting to increase the interest rate, Turkey further reduced the interest rate in the country. Now this country is already too much dependent on imports for fuel. 80% of the fuel requirement of the country is being imported. And out of this, 80% of the gas requirement of the country is imported from Russia. Now, since the Russia-Ukraine crisis hit in 2021, there has been severe impact on Turkey's economy also. There has been severe inflationary pressure on Turkey, and what the government is doing is, without not controlling the inflation, they further reduce the interest rate in the market. And what is the implication of this is what we call as unconventional monetary policy in Turkey. To fund the extravagant expenses of the money, the government did the second biggest blunder, that is printing of the money. And these two, printing of the money and unconventional monetary policy, this is what resulted in the inflationary jump or inflationary cliff in Turkey's economy. 85% inflation in 2022. And even though it has reduced to 40% in 2023, 40% is still much beyond a stable levels of inflation. So this is the overall economic cycle or economic picture of what Turkey went to. Starting from a high current account deficit to mounting external debts to pandemic, then Russia-Ukraine war to unconventional monetary policy and printing of money. This led to complete destruction of Turkey's economic situation. Now comes the most important question. Why Turkey went unconventional way? It is not like the wisdom was not available. Every country is going the same path. Even we have seen in US, in India, in every other country, there was inflationary pressure. There was inflationary pressure out of Russia-Ukraine war because the oil prices were increasing. Then why Turkey went this unconventional monetary policy pathway? There is only one answer for this. That is elections, or that is the political pressure. That is the short-term political vision. Turkey was having elections during this time. Erdogan wants to come back into power. And to come back into power, he doesn't want to disturb, or he doesn't want to make people unhappy. To keep people happy, he kept the interest rates low despite having inflationary pressure in the economy. Now, what is the consequence of this? Extremely unmanageable levels of inflation. Now, even though politically Erdogan has won the election, he came back into the power. But he cannot manage the economy at 80% inflation level. Now, his response to this situation again worsened the economic balance of Turkey. What he done is, after winning elections, after coming out of the populist mode, what he tried is, he tried to increase the interest rate all of a sudden. Around 30% hike in interest rate was made in a quick span of time. And this again worsened people's situation. This again worsened, robbed people of their savings, robbed people of their whatever they are left with, despite having these high levels of inflation. So this political decision that is taken to get back the power again, that is political decision that kept a vision of only winning the elections. This is what pushed Turkey into this kind of tragic economic situation. This is why the Turkish currency is falling at an unprecedented rate. Whichever country, this is a learning for any other country, including India. If our economic decisions are prioritized beyond economic fundamentals, if politics of the day is dictating our economic policies, sooner or later we are heading towards a major economic crisis. So let's comprehend this. Here you can see some of the comparison with India as well as Turkey. See the major differences. So many comparing factors you can see. Similar to the situation of current account deficit, similar to the state of external debt. But where comes the major difference is the inflation, foreign direct investments in India, foreign exchange reserves in India. It is these three aspects where India at least achieve very strong economic fundamentals. This is what withstands India against strong current account deficit. India is always having a current account deficit of $9.2 billion in 2023. So things are quite different. You can see how we are different, how strong fundamentals can protect the country from different kinds of economic situations. So let's comprehend the golden lessons for India or any other developing country in this situation. Diversification of economic matrices. Any economic growth or economic performance metrics solely based on GDP is not going to completely show the economic situation of the country. You have to take into account the performance of the currency. You have to take into account the performance of the fiscal deficit, fiscal performances, export performances, import dynamics. All these matrices, all these indicators play a role in defining the economic of the country or defining the economic performance of the country, and GDP cannot be a sole indicator. And focus on exports. There are many countries who, or many analysts came up with the belief that export-led growth, era of export-led growth is end with China. There is no other country. The last candidate in the bus of export-led growth was China. The era of export-led growth is over. But the example of Turkey, the example of other developing countries, whether it is Vietnam, positively developing countries like Vietnam or Thailand, the inference is still the same. The fundamentals of economics is still the same. Economic or the export-led growth is still the pathway if you want to have sustainable economic growth over a long period of time. Similarly, the most important lesson, that is avoid short-term populist economic measures. We have our elections coming up in 2024. So what kind of populism are we going to see in this period? Government will come up with a number of policies, with higher fiscal deficit, with free this, free that, all different kind of freebies. But even though it may have helped the people in the short run, the cost of freebies, the cost of violating basic fundamental economy, that is going to be huge for any country. And the case of Turkey is the most recent examples. So on this note, we will wind up today's session. That's all for now. Thank you so much.